Good Monday. This is Jay Brew, co-chairman of Seafried and Brew. We talked last week about strategic planning for the next number of years and looking out long term. That one of the things that I keep bringing up and keep reminding people is that as part of your overall strategic planning that you really need to plan in tax efficiency. Because what's happening out there, after we came out of the financial crisis, we've been seeing effective tax rates for community banks going back up almost to the highs in here, which would be 34%. In fact, right now we're up to about 29.59% with the fact that banks' earnings have come back on an overall basis looking across the country. And when we see that, is that essentially is coming right out of net income. So tax efficiency, which once again I always sit there and say is not tax avoidance, is a situation that every community bank should have as part of their strategic planning. Because when we look at actual tax efficiency, depending on what your state taxes, etc., but just taking into account federal, is that tax efficiency is most likely close to 18%. So if you look at it from that standpoint, is that to put into place a tax plan within the strategic plan is vital, especially as we look into next year with interest rates remaining low. That tax planning becomes very vital in terms of trying to keep those earnings up at the highest level possible. So when we look at it strategic planning wise, what I say is this can't be done overnight. But what happens is that over time, going out, say, 3 years, is that you should be able to get to that tax efficient level. So when you look at things in terms of being able to do that strategically, the things that come to mind for community banks, which I've mentioned before, are things like BOLI, in terms of maxing out BOLI, because of the tax advantages of it. Of course, when we look at tax-exempt securities, is that tax-exempt securities can be used effectively to bring that tax rate down over time. When we also think about tax-exempt loans and put loans into that mix, is that they can bring in valuable cash-type deposits, those checking-type accounts from the municipalities, which will also help your overall income and value of the institution. But it's a plan. It needs to be put into place. The board needs to monitor it on a quarterly basis to make sure that you're going on plan and you can reach tax efficiency. Because we have numerous clients that are, in effect, tax efficient, paying no more than what they have to in terms of monitoring that and keeping the tax efficiency at its highest level. Because the thing that I keep on saying when I do strategic planning retreats for boards is that I say, as individuals, do you like to overpay your taxes? And I usually get a laugh over that. Also, from the standpoint that the book that I wrote called The Art of Tax Efficiency for Community Banks is by far our worst selling book at Seafried and Brew. And I ask why. Because basically banks do not have it as part of their strategic planning. This is Jay Brew, co-chairman of Seafried and Brew. Have a great week.